Hello and welcome to the Stephen Carlson Show. I'm Stephen Carlson. We all know that Social Security and pensions are not guaranteed for us when we retire. That means it's up to you to build the wealth you need and you desire. No one wants to live out their final years poor, so in this video I'll show you how you can retire a millionaire and have all the money you need to live a comfortable life. So just how much money are we talking about here? How about $1.6 million in your retirement account with initial investment of less than $20 per day. Plus, if you stick through to the end of this video, I will show you a bonus tip on how you can triple this amount. But first, now that I have your attention, please hit the like and subscribe button. Doing so helps push the YouTube algorithm to show this video to more and more people. Also, a little bit of legal mumbo jumbo. I'm not a certified financial advisor, nor am I an accountant, I'm not a tax lawyer. And everything I say here is for entertainment purposes. So don't sue me, okay? For the calculations, I'm presuming that you're going to start at age 16 with your first part-time job. But honestly, you could really start this at any time of your life and still have a great improvement in your retirement lifestyle. So let's take $16 per day and allocate that to a Roth IRA. Based upon historical averages of about 7% return, by the time that you are 59 and a half, your investment will be. So let's take $16 per day and allocate that to a Roth IRA. Based upon historical averages of 7% return, by the time that you are 59 and a half, your initial investment of $264,000 will now be worth $1.6 million, all tax-free. Whoa, wait. Sure you're a little confused. Don't worry, I'll explain all this to you. Throughout the years, of course, you paid your normal income tax on the $264,000 you invested over the 40 years. All of the profit you made from your investment is now tax-free. Thank you, Uncle Sam. Depending on what tax rate you are in when you retire, your $1.3 million that you made as profit is all tax-free, and you saved over $900,000 in taxes. This means using this simple Roth IRA strategy means that you have $1.6 million tax-free sitting in your account, not $700,000 after taxes. What is an IRA exactly? So I'm sure you're a little confused and you're like, what the heck is this Roth IRA he keeps talking about? First, an individual retirement account, commonly just referred to as an IRA, is a specialized bank account with tax savings benefits for you to use to invest for your retirement. You have a lot of flexibility in what you can invest in with your IRA. But for most beginners, a wide-ranging market cap fund would be best. Check out my video on how to invest in the stock market, link in the description box below. Let's get back to the IRAs themselves. Within the umbrella of IRA, there are basically two primary types of IRAs that we will cover today. You have a Roth IRA and a traditional IRA. At the core, both of these IRAs function pretty much about the same. Currently, if you are less than 50 years old, you can contribute a maximum of $6,000 per year to an IRA account. The main difference between a traditional IRA and a Roth IRA is how it is taxed. A Roth IRA is often referred to as a tax-advantaged retirement account. What I mean by this is the money you deposit, which is called contributions to a Roth IRA, are made after your payroll taxes are taken out and paid that year. Then any profit you make from your investment grows tax-free. As long as you follow the rules of the Roth IRA distributions, you will pay no income tax when you take your money out in retirement. Whereas a traditional IRA is tax-deferred. What I mean by this is you do not pay any income taxes today on your contributions, but when you withdraw your money, you do pay taxes at that time. As you can see from this chart, based upon our working example, you can withdraw about $2,500 per month from your IRA when you retire. You will notice by using a Roth IRA versus a traditional IRA, you will save over $500,000 in the long run based upon today's tax rates. I know you might be a little confused, and that's fine. Let me go through a very simple explanation. Don't focus on the exact numbers. I picked them for easy math so everybody can follow along. The key is to follow the concept behind how a Roth IRA works, not the exact numbers. For example, if you made $10,000 at your job, depending on where you live in the country, the taxman wants about 20% of that money to go to federal and state taxes. That leaves you with $8,000 left over, right? 10,000 minus 2,000, 8,000. Got it. Now if you take all of that $8,000 and invest it into a tax advantage account like a Roth IRA, you Don't do anything to the money, just leave it there for 40 years. You'll have a little over $120,000. Okay, I know, a lot of numbers here. Just stick with me. It's very important. Remember, you've already paid your taxes 40 years ago when you invested your $8,000. Remember, we had $10,000, paid $2,000 to taxman, left you with $8,000. That means that $2,000 is all the taxes you have to pay on that money. But if instead of using a Roth IRA, you decided to use a traditional IRA or a regular brokerage investment account, you would have the same $120,000 after 40 years, but here's the part that really sucks. Now you owe taxes on the full $120,000. Even if your tax bracket stayed the same, that's $24,000 you owe to Uncle Sam. Sucks, huh? Even more important, today we are at historically low income tax rates, and no matter what your political view is, we can all reasonably predict that taxes will be higher in the future. So let's go back to our $16 a day investment example. By biting the bullet now and paying today's tax rate, you will save even more than the projected $562,000 if the tax rate increases by time that you retire. So now you are not only a millionaire, you also save $500,000 in unnecessary taxes. Bonus fact, as a special thank you for staying all the way through to the end of the video, if your employer offers a simple IRA retirement plan with matching, you would be a fool not to take it. While not tax advantaged like a Roth IRA, a simple IRA is tax deferred. I know. I just spent the first half of this video explaining why a Roth IRA is so much better than a traditional. But stick with me, I have a reason for that. And of course the reason is you can do both. Basically, a simple IRA is a traditional IRA that you contribute money, but more importantly, your employer can also match your contributions each year. So if you put in $5,000, your employer could put in $5,000, instantly doubling your money. You can invest up to $13,500 per year into your simple IRA. If you follow the same investment strategy as we did with our Roth IRA, in 41 years you will have contributed $570,000. Plus, now you add your profit of $3.4 million is your total account value. Best of all, remember, you only put in half of that money. Your employer gave the other half, about $285,000. If you add up both of these accounts together, you now have $4.5 million sitting in your retirement accounts between your simple IRA and your Roth IRA. Not too bad, huh? But wait, I'm sure you're asking, what if my employer doesn't offer a simple IRA? Well, could get a better job. Or better yet, how about you start your own company and then you have full control over your destiny? You want me to make a video on how to start your own company? Comment down below and tell me that you want me to make that video. Obviously, starting with these investments as early as you can in your life and sticking with it will give you the best financial results. If you only invest for a few weeks and you give up on it, you're barely going to have enough money to buy a few McDonald's Big Macs. Trust me, learn from my foolish mistake. When I was 16, my parents helped me set up an IRA, and like an idiot, a few years later I cashed it all out. I lost half of it to tax penalties, all because I wanted some new computer gear. It wouldn't be until my 30s before I finally started up an IRA again, and I lost nearly $500,000 in potential earnings. Don't be stupid like I was. Invest for the long term, and when you retire, you can thank yourself for all your hard work. Now that I showed you how to retire with $4.5 million, how about you smash the like button so hard you break the glass on your phone. Thank you very much for watching this video. I'll see you next week.